With the debt markets pricing at a pretty high chance of default, markets reacted as you would expect.
A vast amount of capital pouring into the space, and that's been pushing up valuations. That's kind of the backdrop of this rally, right?
That is unsustainable. And we're also seeing a lot of pre-market buying. And the final thing I'll talk about is Bitcoin. Just some very interesting news. 3 regulators got together and wrote a paper which basically saying this is how we'd like to regulate stable coins. And the market took it very positively. No surprises. This had all been articulated and expected in some way. As far as Bitcoin specifically, we thought there were a couple of very good moments this week. Eric Adams, who just was elected mayor of New York City, said he would accept pay in Bitcoin, and the Miami mayor said he would accept much more than, I can't remember the time frame, in his salary in Bitcoin. So we have some friendly competition. They both want Bitcoin in their states, so Bitcoin developers and the Bitcoin ecosystem, which is fantastic. And then Square, Jack Dorsey, when asked on the Square earnings call today, would you consider supporting any other cryptocurrency? And he said, no, just Bitcoin. Bitcoin is the native currency of the internet. And so we thought that was very interesting. The bond market is squarely in the lower inflation, if not deflation camp. The dollar's going up. That is an anti-inflationary force. Crypto is in the inflation camp. If you think about Bitcoin as being a hedge against inflation, if that's how you're thinking about it, or NFTs being a hedge, collectible, a hedge against inflation. That could be in the inflation camp, as could housing. These are real assets, yes, and they can be hedges against inflation, but the stock market and the bond market are also assets. And we've got all markets rallying. All markets are rallying. And could this mean, therefore, that velocity is going down, the velocity of money? What does that mean? If consumers are spending their money on assets instead of goods and services, then what's happening is all of the money printing that people think is going to cause permanent inflation in the price of goods and services, that is wrong, that it's actually moving into assets. So velocity involves GDP and money. So the velocity of money has been coming down because people have been saving and putting more money into assets. Is that what's going on here? Well, in the GDP report this week, I think it was, or maybe it was last week, real GDP growth was 2%, a huge disappointment. But what the headlines did not capture is if you looked into the guts of the GDP report, what you would have found was the only reason GDP grew was inventories. And everybody thinks we're terribly short of inventories. Real final sales, so this is taking out inflation, real final sales were slightly negative. Now, could it be, and I'm seeing this behavior on the part of millennials, could it be that they would prefer not to spend on goods and services, but to invest, especially in crypto and NFTs and stocks? So very interesting there. But in terms of housing as an inflation indicator, Ivy Zellman of Zellman Research came out this week. She made a fantastic call on the housing bubble and bust starting in 05, 06. And she was right, just a little early. she is very concerned that the housing prices we're seeing now are not sustainable, and for a few reasons. Um, there is a lot of speculation. So iBuying, so that's when online brokers, real estate brokers, are willing to buy a home from someone who wants to sell, renovate it, and flip it quickly, and take friction out of the home selling and buying process. Well, one of the major iBuyers out there this week basically pulled out of that market and said, "This is unstable. This is an unstable situation. We're losing money. We're not going to bet the company on it." And I thought, wow, okay, that suggests something's changing in the housing market. We're also seeing massive inflows on the part of private equity, because and we have since 08, 09. They've made huge amounts of money from real estate, and they're continuing to pump more, buying up large tracts of homes all over the country, and then selling them off at a profit after renovating. That is unsustainable. And we're also seeing a lot of pre-market buying. I think one of the controversies out there is his contention. The inflation we're seeing right now is transitory. And he's sticking to that line. Others on the Fed board are becoming a little bit more concerned. The money growth rate is still around 12.8%. That's where it has been since the beginning of the third quarter. So it has stabilized there, interestingly, down from 27% during the depths of the coronavirus crisis. So nothing changing there so much. But the question about transitory or not, let's think a little bit more about that. The market is going up. If the market were going up, I would imagine that fears of inflation were diminishing, but they do not seem to be. The headlines and actually some of the statistics that we've seen coming out are quite surprising on the high side. They're certainly surprising me. So let's talk about why inflation might not be transitory. And I'll cut to the quick and tell you, we do believe that inflation is going to come down dramatically. So we have not changed our point of view, but let's be fair and balanced about this, and make sure that we do understand what's going on out there. Fiscal policy. I think the elections this week were a bit of a wake-up call to Congress to get something done. And yet, I'm not sure they're going to get everything they want done. So what do I mean by that? It looks like the infrastructure bill will go through. As soon as the House passes it, it will go straight to President Biden's desk, and he will, of course, sign it. I don't think that the economic and social infrastructure bill will go through. Maybe not until the midterm elections next November, not until those pass, because this election on Tuesday showed policymakers are going to have to stay away from controversy. And there are a lot of tax proposals in the economic and social infrastructure bill that many voters in the swing states do not like. Polls are showing they do not like them. And I think the election this week placed, my sense is it is now placing, from a politician's point of view, more weight on those polls.